DraftKings buy signal is always right. DraftKings stock analysis. Is DraftKings growth potential already baked in? DraftKing closed the session of the 9th of April 2021 at $62.31, and at some point during that session the price crossed above the 50-day moving average. So one of the questions we asked is it, or rather, one of the assertions we made was that its buy signal is usually or always right. So we're moving on. We can see what is going on there. We can see it's currently trading below all of its, I would say, all of its short and intermediate trend lines. Moving down, we can see that momentum is waning. The unbalanced volume indicator doesn't seem that strong. MACD is below the signal line, and the readout says that DraftKings appears to be consolidating within a longer term uptrend. That will be the 200-day trend line, and it says it's consolidating. Okay. The average directional index is below 20, indicating that shares have traded sideways recently. However, the 200-day is still sloping bullishly upwards. It's lagging the S&P 500, unfortunately. Momentum for DraftKings is strongly bearish. The 14-period slow stochastic oscillator is falling as investors sell shares and drive the price lower. The unbalanced volume indicator is bearish. Okay, the slope of the indicator is negative and suggests that there is a lack of buying interest. Okay, we're moving up. We can see, yes, a lot of negativity there. The momentum and the volume are very much poor. So what is it? What's going on? Well, technically for now, it is definitely in the interim, the short and intermediate time frame. It is definitely a buy. But the other issue is a lot of market participants may not want to get involved with DraftKings because it's not a penny stock. So we can go ahead and tell you that there are other ways you can trade DraftKings. You can trade the options. I know options are really, really risky, and it's not for everybody. Of late, the put call ratio is currently at 0.37, but according to certain experts, there is also an unusual interest in long puts. That put call ratio simply indicates in the absolute. I mean, taking in all the apps or the open interests, there are more interests in the calls. That's for those who are bullish. These are the calls, and then there are more interest in the calls. So, but at the same time, also there's also an unusual interest in the long puts. So it also seems DraftKings options players are pricing in relatively low volatility expectations for now. This volatility has in recent times exceeded the expectations of options players. So basically, if you really want to get involved with DraftKings, like I said, one of the other ways, if you don't have all the money, is with options. So we have been able to select a few. We've selected which one did we selected this 64 strike to sell to open, and the 66.50 buy strike buy to open. So if you have seen it, it's gonna give you a call spread, vertical call spread. So it's gonna be a credit. So I think the philosophy in this is that you don't exactly know where it's going to go during this week. So basically you're saying, all right, if it's going to advance, at least I've sold it at $64.50, and then I'm also trying to make sure I don't lose out by buying it back at $66.50. So all in all, I think that you might get something there. Moving on. So it's just basically going to cost you $30. So that's just to get involved in one of the contracts. So if you have up to $300, or even up to, you can increase it by, this is only one contract, so you can increase it by any amount you can really afford. So that's one of the other ways you can get involved with DraftKings. You must have also heard that it's gotten involved with WWE, and it's acquired it's a lot of a few other companies. It's also moving on. You can see it's strongly, strongly bullish, but at the same time, currently now a buying opportunity is there right now. So like I said, if you can't get involved because it's trading at $62, you can also get involved with the options. So, but the caveat there is that options are highly risky, and if you're trading them, there's a good chance that these options might come into the money, and when they expire, and you don't take action, you might be forced to exercise them, which will means you might have to put up more capital to buy them at those some of those prices, especially the buy to open one. So, and all that stuff. So you have to be really careful, and it's highly risky. I'm just putting out some of the strategies you can get involved. I'm not exactly saying you must buy it or anything. So it's your decision to go ahead and buy it or not. Okay. So if you're new to this channel, subscribe, like, and share. If you're already a subscriber, thank you very much for watching this video.